Hi everybody, it's FIBO Group and you are watching to the Market Watch review. Shares in Asia Pacific fell overnight following further losses on Wall Street Tuesday. European shares fell on Wednesday. As of 9:31 GMT, the region-wide Stoxx 600 was still flat. However, U.S. stock futures were slightly higher in premarket trade Wednesday morning. Today, the U.S. dollar index is at or near its flatline. After yesterday's false breakout above $1,824, gold is now in decline. On Wednesday, oil prices dropped due to concerns that China's rising COVID-19 rates will cause a disruption in its economic recovery. This could also fuel demand growth as China loosens its pandemic restrictions. The price of crude oil in the United States fell 75 cents to $78.78 a barrel. Asian Pacific market. Seiji Kihara, Deputy Chief Cabinet Secretary, stated Wednesday that Japan's government will make increasing wages a priority in its economic policies next year. Japan's consumer inflation reached a record 3.7% in November. This is a high level for Japan, which was well above the Bank of Japan target. In November, Japanese factories saw their output fall for the third consecutive month. This was due to weaker demand for machine products and a worsening global economic outlook. The greenback hovers near the resistance zone, which could be located in the JPY 134 to 134.5 area. The Aussie is looking to move towards the resistance zone around the 0.6850 level in relation to the US dollar. Market of Europe. European shares fell on Wednesday, while the FTSE 100 in the UK outperformed peers. This was after a long Christmas weekend, when investors evaluated Beijing's plans to reopen its COVID-battered economic system. The Stoxx 600 was on track for a 12.2% annual loss due to concerns about an economic downturn caused by global central bank tightening. Both the single European currency and the British sterling are within yesterday's ranges. Market of America. Wall Street closed lower on Tuesday due to rising U.S. Treasury yields, which pushed mega-cap shares that are sensitive to interest rates down. The tech-laden Nasdaq was the worst hit by growth stocks. The Nasdaq was joined by the S&P 500 in negative territory. However, the Dow held onto nominal gains thanks to value stocks. All three of the three major indexes have 3 trading days left in 2022. This is their largest annual loss since 2008, which was the bottom of the global financial crisis. The Canadian dollar is showing signs of rising in the uptrend against greenback, and it appears that it will soon reaffirm the high it reached yesterday. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.